All right, how's it going today, guys? Another video from James Howell, founder of the Fifth Trading Company. I did a little question poll about what kind of videos you guys wanted to see next in the Discord chat. One of the first ones that popped up was how to find stocks to trade, how to really create your watch list. So since most of you are options traders, you're really going to want to be only trading optionable products. Um, most optionable products are going to be found in the S&P 500 and other major indexes like the Nasdaq, the Dow Jones. Those are going to be your most liquid products, your most heavily traded products. Good way to find that out if you head over to the Market Watch tab in Thinkorswim. Click this little tab up here that's going to control your separate watch list. Go down to the public R&W section and then go to the S&P 500. It's going to bring you really all the stocks that are compiled in there. How I kind of like to use this to analyze what to trade. Most of the names you're going to know, there's probably going to be some names that are recent additions that you may not know. They're smaller companies, but I like to switch the net change. You can see today, it's March 24th, 2021. SPY was down today. Amazon was obviously down, so we can see that these are kind of the biggest red movers. Um, you can attune this. If Amazon, you see that they were the leader in being down today, you can go over to the Amazon chart, and analyze price action, see how it was. We kind of see that Amazon's roughly been range bound all the way since basically August. Pretty wide range, but pretty typical for Amazon. Um, yeah, so I mean, if this was something you were going to add on your watch list, you can analyze it. Find any ranges. Like you get a nice little sideway range. Up here always take roughly the high. You can kind of find the base down here, and this is going to be basically your bottom part of the range. So Amazon right now is trading in a sideway range, obviously long term. Amazon's kind of always bullish, but then you know bump back out from 4 hour chart. Let's go down to the weekly. Just make sure you analyze what that trend, the trend is. Here's some support and resistance, obviously I had it marked. You can see definitely flat as of right now. Still a good, technically still in an uptrend, heavy consolidation. Pretty typical for Amazon. You can see when they were trying to break this 2000 mark, they consolidated for multiple months, or multiple weeks I should say. um, Coming up to the top here, I really think that Amazon probably, if they break this high, they're probably going to see closer to 4,000. Definitely possible for a company like Amazon. But analyze whatever the trend is. If this is sideways, so you'd mark this range, and then obviously if you take this trend line and you're trying to draw a trend, the trend was broken. Um, that's leading into your sideways range here. So roll down to the hourly chart. If you're trying to break this down for scalping or something. Or even in relation to swing trades, any major range break within the stock is something that you're going to want to really be alarmed about, because that's where most of the biggest moves are always going to be happening. If there's a break in the trend, if something's breaking the sideways trend, you're going to see X move somewhere. If it's breaking an uptrend, you're going to see the move down. If it's breaking a downtrend, you're going to see the move up. Um, so here, you got this kind of, like I said, sideways market. It's going to be a little flatter, flatter kind of uptrend. We could see that, Amazon really couldn't break this high around, 3180 or 3170 and started to break down. Um, how can we use this to find a potential trade? Well, we know it broke a major moving average on the hourly chart. We already know that. Then we're going to find what are the next real big resistances. So let's try to find, on the hourly charts, we're playing in the short term, where are the biggest bounces? We see down here, in this area, this wick signaling us that buyers were in this level. All these green candles coming off of support, so we can mark that. Again, you can see here, bounce into a little gap up, gap down, found support again, nice little bump back up. It's been the same process over and over again. It's probably, since we're in a sideways market, we can kind of justify that we're probably going to see a move down before coming back up again, since we've been in a sideways range. So we'd be watching a level, roughly around 30.72. You can kind of see the wicks here. It pulled back, retested when it came down here. You can see the wick, wherever the wicks are. If the wicks are coming from the top, like if we zoom in, here, let me zoom into this little area for you. You see these wicks right here. That's telling you there's selling pressure in the stock at this level. So this 30.72 level, there's sellers. There's been sellers previously at the, at this range. Come back up, test, sellers came down. Sellers here, high wicks. You know, same thing on the buy side. You got buyers signaling here. This obviously the 32.25 level roughly is signaling some buyers there. And even if, when something's changing from support into resistance or resistance into support, it's not always perfect. It can always hop right back into the range. Like it tried to hold back above that level and then came back down, but it came for a rough retest of the area and move. So when you're looking to scalp or you're looking to swing, you need to pay attention to those values, right? And if we know that the value is down here and we've known that we've seen buyers in the past year and sellers, we're going to find where is that main pressure. So that's rolling back out to a farther dated chart. Where is the main pressure coming? So we have short-term trend within our sideways trend is telling us down. Although Amazon, since finding support, is trying to break this short-term downtrend and lead closer to the top of the sideways channel we've been trading in for the past couple months. Totally possible. However, with macro events in the market, that may not be, that may not happen. It may totally break back down and go under, 3,000. But since we're looking at the 4-hour chart, 4-hour chart has since showed us some rejection, but still technically kind of holding that little light uptrend that we, we kind of had marked. Shift this down just a little bit so that wick touches, but roughly still our area. And let's go to we'll go to the 30-minute chart, a little more accuracy. But again, spots where there's gaps in the market, something you got to pay attention to, because you could have a wall of sellers at the top of the gap or in a wall of buyers at the bottom of the gap when the gap comes down and fills. You can see here the gap that was created here, price didn't hold and boom, gap right back down to fill it before ending up to come back up and then blew past this previous high over here. And so anytime that we have these gaps, that's going to be, as a scalper or a day trader, pay attention to that, because that's always a notable support or resistance area where there's going to be some sort of, whether if it's an algorithm or institutional trader sitting there, there's going to be somebody there at these areas to pay attention to. And that could be like I said, volume of buyers, volume of sellers, really either or. So like right now we have this gap over here and Amazon closed, roughly around it. In the after hours here, really not too much price action, is down a little bit, but we can see that maybe this gap might fill down. We end up seeing the 30.60 area, nice little move. So if we're looking to scalp this, maybe we want to check where's the top of the gap. So we know we have top of our gap here, right around 30.80. Got another gap up here, another gap over here, and another one right around the same price level at that 30.80 mark. We'll delete that one. We'll clutter. But yeah. Anyways, we can mark that. So if we're looking today, if we're flipping to the 5-hour chart and we're really trying to, scalp this down, we're going to be looking for high volume. Is it breaking the 21-day moving average for volume? Great. If we're going bearish, is the implied volatility starting to kick up? Or market makers starting to bid up the cost of the puts? If they're bidding up the cost of the puts, then implied volatility should go up. That means that the market's implying a larger range. The stock or the underlying is going to be moving in a larger range. So you see up here, you see a slight, 1 to 2% tick up in implied volatility. Well, maybe the market's probably pricing there could be some significant move coming, whether if it's down, it continues its trend, which is normally the case. Implied volatility is ticking up on the down move, you're going to see more red. If implied volatility is falling and the stock is falling, be aware for some potential bounce, because if volatility is off the table, put buyers are coming out. People aren't really using their hedging tools to create that volatility, because if we buy puts, we're buying the right to sell 100 shares of stock at X strike price. Very powerful tool for institutional investors if they're managing client portfolios and they own 500 shares of Apple and they want to sell their stock at 115 if Apple's trading at 120, and in the event Apple gaps down to, let's say, 110, the 115 strike put for Apple and bought them the right to sell the stock at 115 instead of 110. So that creates a little bit of market volatility. Anyways, moving on. And then coming down to your support and resistance too, make sure you're always documenting these things. Like I said in the last video, that it's not an edge. It's just something for you to note and to pay attention to, that, price has reacted a certain way here. So if we're looking for volume to kick in, when that volume does step up and we're noticing implied volatility is kicking in, if price breaks below, we're going to look for that retest, like up here. We see, downward trend, and then boom, price bumped up, and then the rug pull came, went right down, and then you saw the retest again. The price comes back up. There's always a retest. Every time there's, breakdown, it's gonna come back up because everything moves like a song. It trickles, boom, 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 comes back up, then comes down, comes back up, comes back down. Series of higher highs, higher lows, or lower highs and lower lows. That all things you got to pay attention to as a trader. Whether if your style is a quantitative trader, this may not be data that you're going to be looking at, but if in terms of if you're looking at maybe what the skew is, pay attention. If you're showing a negative skew and the rest of the market's red, well, okay, that's probably something you should pay attention to. And if implied volatility in, the 30-day chain is ticking up, okay, then the market's pricing in short-term volatility. And then same thing if you're looking at the 90-day or 60-day chain, what is the term structure looking like? Are they, pricing higher realized volatility, or are they pricing higher, implied volatility? If you don't have any way to calculate realized volatility, you can do so in the predicting alpha terminal, or add the thinkorswim historical volatility. You can change the values to daily, 30, 60, or 90. Comes pretty close, not the exact same formula, but pretty close. But always pay attention to just make sure you're, finding your principles. So if we're looking at this, okay, we know Amazon's in a downtrend. We're looking to, potentially short this, this little, let's flip back to the 4 hour, sorry. We're going to try to short, this rejection of the 200 EMA, or this, 3180 level. We're going to try to short and hopefully maybe be able to capture the move down to 3020, be a $60 move. Amazon's done it in the past from the same level multiple times in a range bound market. And we got a little tick up in implied volatility. If implied volatility continues up, then we, can capitalize on the short. This could be a scalp that turns to a day trade, or, in a swing if the, really the momentum was there. So going back to Market Watch, right? So take your, you can look at the gainers. So right now these are losers because, like I said, we had a red day. But right on the bottom, these are going to be our, obviously are good big movers. A lot of these names, they're going to be names that are optionable products, but their bids are going to be a little wider. Like, AutoZone has an extremely wide bid. Not many people are trading it, so I try to stay away from those names. Small account guys, you're really going to want to look for the stocks that are, if you hit last and just sort them, biggest to smallest, you're going to want to go to these ones that are down here and just try to find ones that probably pop up, like Ford, GE, all good names, high liquidity. Obviously American Airlines, Under Armour is not all that liquid, but these names are all something that you can really, really use to trade. Right. So if we did want to trade GE, hop over to the chart, right? Analyze what's the trend on the big charts, right? GE's got plenty of data, still in a downtrend from the early 2000s, right? So kind of roughly that's our range. And we're always looking when we're doing these trends. We're really looking for the most touches. If something like this where you are coming back from the all-time highs, the pullback is never a bad spot. Like the first, if it this is all-time high, and then the stock comes down and then makes this is the first pullback range. That's a very common place for most technicians to be able to draw trend lines, not necessarily the all-time high or all-time low. Generally, the first pullback is that's really the true start of the trend. Like this was really where the downtrend was confirmed, because this is now a higher low, and then you already have the series of lower lows down here. Um, Again, even if you want to take the bottom of this, obviously these are starting to kind of tighten up. Kind of a little fallen wedge, bull flag ish, if you wish. Again, roll down. If you want to go to the weekly or whatever, price still kind of, sideways, still downtrend, but looks like it's kind of flattened now. It's building support, something to make note of. You're looking at the rejection, the 200 EMA on the weekly, there's probably, sell algo around there. However, you still have buyers, in this area. There's still value, roughly in this area to be bought at. Roll down to the daily. Okay, now we get a little depiction of price. So we're going to take the short-term trend, right? Obviously is up, right? Looks weak. Series, we have this, here's the high of this year, comes down, and here's the pullback. So this is signifying, short-term downtrend is here. But, you know, we're in kind of an area of confluence because we're sitting really on the top of like, a resistance area. Got a little gap. So there's a mix of buyer and sellers here. Um, and if price broke down, look for where that resistance is. If it's around, this 12.30, $12 area, set an alert. $12, bang, right click this thing and create the alert. If you're looking to go bearish, you'll set the alert. And then, if you want to go, set it at or below, and then when the stock hits it, boom, you get the alert. Everything you can set all your trades, you can be setting alerts constantly. Just because you get an alert, do you have to take a trade? No. If the alert is hit down here, maybe the price is gonna bounce. It's not always gonna go the way that you want. It could do something completely different. But to watch it, maybe set it a couple cents before, or if it's like a name like a Tesla, a couple dollars before. Um, all good habits to really develop. So we can just take a little sport here. But this is kind of a little symmetrical, short-term symmetrical triangle here. Break it down to 4 hour now. We can kind of see that obviously up 4 hour 200 EMA usually brings a lot of swing traders in. So there's going to be another confluence in price. So again, if you wanted to take any levels from here, right? So like we have a couple little buy spots, buy spot right here, buy spot right here. That may be a price if you're going to the upside and you don't want to buy off support because you think the support's too risky to buy, you'd prefer to buy the breakout. Then roll down the hourly, you have that spot. And then if price, dips like you think, and then does come back up when it breaks whatever high it was or this low, there's a low set in with a wick here, and then you had the retest. Whenever it breaks this area, that would probably be your spot. You'd want to get into, probably scalp the calls. GE, not a big mover to, not a scalp, really super scalping name. Could you scalp it? Of course, you can do anything in this market, but just as an example and a learning exercise, just something to make note of, set that alert here. And then if price broke above, if it looked like it was going to hold, keep going, the volume was good, the implied volatility was coming down. If you use your moving averages, your 9 and 21 EMA, your 5 13 EMA crosses, if they start to cross down here and price jumps above that 9 EMA, then boom, hop in. That's part of your system. And then always make sure you're setting a stop. If you don't like, if give yourself, you don't have to hold something just because you entered it. Give yourself time to stop out. If this is an area you believe if it breaks that a whole wall of sellers are coming in, then that this area is your stop. That here's your risk. And then if you're looking for this as your reward, like I said in the last video, draw it as this so you can see it. This is your, here's your green, and then here's your red. This is going to be the principle for every trade that you take. It's got to be systematic every single time when it comes down to your watch list and writing your watch list. If you got your little EMA cross, I got a 99.21 EMA cross, price above 9 EMA, volumes over 21 day moving average, let's say on the daily chart. We're sitting in a symmetrical triangle. Give yourself multiple convictions to be able to enter a trade, right? We don't want to just, shit, it looks green, let's fucking enter it. No, that's not how you trade. It's all gambling. Make sure you have principles to do it, and then create a system. So every trade should be like that. Every trade should have a, what's the volume like? What is the market implying? What's a rough range the market's implying to be a trade in? What's the option volatility looking like? Does the company have earnings? There's a lot of things to always take into account while developing a watch list. Pay attention to the sectors too. If you're developing a watch list, sector rotation is one of the most popular things. And I like to use the S&P spider products for this, like XLF for financials. Financials as recently has taken quite a hit. I believe yesterday was really their big day on the 23rd. But we can see financials had quite a run, and then it gets to a period that's a little overextended, and money starts to roll out. Then we started yesterday. We had saw tech had a really good day. Roll over to the Nasdaq real quick for that. Nasdaq's king of tech. We had this was that yesterday. This was that little bump up into the supply zone. So money rolls in and out, in and out. Pay attention to the retail sector, XRT. Another one. Retail took a massive hit. GameStop is a heavyweight in this, so GameStop missing earnings. and on top of just all their little drama that they got going, money rolling out of retail now. Retail had a hell of a run. Names like Ulta back at previous all-time highs. Lulu, all names that had to basically adapt during the pandemic that were brick and mortar open stores. They've all adapted. So now they added a heavy e-commerce. Now they're even more valued. So valuations have pushed up even higher. So just pay attention. I do like to use real quick. I am going to try to pull up the spider index for you guys. Just as a good way to analyze sector rotations. You got to see where money's always moving, because money's always moving somewhere. There's always value somewhere. There's an opportunity you might not catch, but someone else didn't. If you can see, maybe there's heavy flow for financials one day, heavy flow for utilities. Um, all great things to pay attention of. So I'm going to switch over to just a little quick screen real quick. All right, as you can see now. Sector spiders, all S&P 500 products. So shows you all the weights. Um, Obviously tech, like I said, biggest percentage holding here. Building materials, consumer staples, discretionary. That's anything basically you want. Consumer staples, all products you need, like toothpaste, food, etc. But this is all something to pay attention to. If you're really worried about, okay, what's the big weight for tech? You can come down here and usually you can see whatever the holdings. Usually a section for holdings somewhere, but oh yeah, click this baby. Yeah, you can see kind of what's derived in the SP 500 tech portfolio, and probably be pretty close to the names that you'll see in the Nasdaq. But again, pay attention. Where's the money moving? These are all big names right here, right? So these 10 or so names, something you should be watching. All highly optionable products. Adobe slightly wider in that, but Apple, Microsoft, King's Tech, very good names to be trading. Find plenty of opportunities almost every single day. Good for small accounts. High liquidity on these stocks is always a good thing. Better spreads, better fills. If you're trading in size, you're going to want to trade a name that's more liquid, because the market maker is going to give you less of a headache when you get filled. So yeah, I hope this helps you guys out. Just a little way to develop a watch list. I will be doing some sort of Q&A, a little workshop, probably in a day or so with you guys. Let me know what you think. I'll be throwing this up on YouTube in probably a couple minutes or so. Thank you guys.